Okay, guys, just a quick update today. The UK house price index for Zoopla, remember this is Zoopla, they compile their own figures, is out for January 2022. So it makes interesting reading because there's a wee bit of differential between what's happening in the UK and what's happening in Fife. So let's talk about that just now. So let me just give up the headline figures here about right across the UK according to Zoopla. So here we are here. The executive summary is basically house price. House prices rose by 7.8% in the year to January, taking the average house price to 244,100 in the UK. Now in Fife, that's around 167,000 is the average house price. So there's a huge differential. There's about 2460, about 68,000 between the average UK house price and the average Fife house price. That's a big differential. Remember, the average salary on right across the UK is round about 30,000, and it's round about that in Fife as well. So it still makes it more affordable to actually buy in Fife because the average house price is a lot less than the average house price in the UK and also in Scotland itself. Wales actually incidentally registered the highest regional price growth for the 11 months at 11.7%, and London had the slowest at 3.1%. London tends to reflect on what's going to happen next, possibly, but London's still got a huge crisis with the Ukrainian situation, and a lot of investors and Russian investors actually invest in London quite a lot. So there's obviously a wee influx of people leaving that market because of the situation, and there'll be new entrants from overseas that come into the London market anyway, and probably start to prop that up. In the new year, there's a surge in buyer demand, according to Zoopla, as it's starting to ease, albeit at a modest pace. Well, that's quite interesting because, yeah, we've got a surge in buyer demand. We don't feel it starting to ease in Fife itself. So that gives us a good indication that we're still quite buoyant market. I definitely think it's because of the price point and average earnings to the average price of a house. But incidentally as well, you'll hear as I go on exactly why Fife's still a buoyant market. But there are good signs for, according to this, they say across the UK, there are good signs for future stock levels with new supply running ahead of 2021 levels in every region. Not necessarily in Fife. Let's have a look at that, actually. Let's have a look at Fife. Classic example. Let me show you this. So this, if I can jump onto it on a separate page, this is where we check Rightmove. So we'll just jump onto Rightmove because this will tell us how many properties are actually sitting on the Fife market. Hopefully everybody can see this. I'll just pop in. If you can see this, guys, just stick number 5 in the comments. That'd be absolutely fantastic if you can see this. I'll stop sharing that and I'll share this screen, and this will give you a good indication about where we are. So if you can see the Rightmove website, stick a 5 in the comments box, please, and I'll know you can actually see it. So let's look at this now. Over a year ago, to this day almost, what happened is, yeah, I could see some 5s coming through. Thanks for that, guys. Over a year ago, what we found was there was around about 740 properties on the market, 741 over a year ago in the Fife market. So 741 properties in the Fife market available for sale just over 12 months ago. So everything being equal, and they're saying that stock should be getting replenished, and we should be going back up the way. Maybe a month ago, we were around about 460, and a month before that, we were around about 470. So let's have a look at today's stock, exactly how many properties are available across Fife for sale. And it should be up according to this, well, according to what Zoopla's saying, and it isn't. It's down. So there's only 429. You can see that at the top corner there, the top left-hand corner. 429 properties right across Fife. Now, I think that's the lowest I've ever seen the number of properties available throughout Fife. That is a recipe for a continued boom as a result because of this. So I can see the Fife market continue to boom as a result because there's only 429 properties available for sale. So it's a disparity between what Rightmove, what we can see in Fife, and also what we can see, what Zoopla saying. Maybe Zoopla sees a wee bit of an early market, and they have the indicators to suggest that. Let's jump back to the Zoopla report again. So just get that screen in front of me here. Hopefully everybody can see that again. And if you can see that, just stick a 3 in the comments. That will help me make sure everybody sees it. There's been a particular rise in family homes listed for sale. We continue that forecasting an ease in price growth during 2022. Well, I could really say a remark, but no, Sherlock. You know, we've been at 16% in terms of the price rises in a year-on-year to December, according to the Land Registry. In Fife, a 16% increase in a year. Over Scotland, it's been 11.4%. So Fife has been the biggest mainland county last year from January to December to have the highest price and highest house price rises right throughout the whole of Scotland last year. So will that continue? I don't think so at 16%. I can't see that at all. But I still think we will still continue to see house price rises in the Fife area and across Scotland at a lot higher than what they're predicting. Most people predict 4 and 5%. I've got a sneaking suspicion it's going to be more. It's probably going to be more double that, if anything, between 8 and 10% by the end of the year. But that all depends on what goes on in the economy with inflation, and it also depends what goes on with the situation with Ukraine. But if record low stocks are still there, they're still going to have people clambering for the right property. I actually said to someone today, people don't move for the sake of moving. They actually move because they have to move. If you've got a baby on the way and it's 9 months, it's not going to wait any longer. It's on its way. So you have to move whether you like it or not. So moving house is because of your current situation or your circumstances. It's not because you just feel like it in most cases. So that gives you a strong indication of what's going on. It will still continue to drive forward. Let's pop back to this chart and I'll read a bit more and tell you a bit more about what's going on here. So we can see in here, there's buyer demand. They're saying new supply starting to rise according to Zoopla. Again, in Fife, we can't see that. Number of sales agreed, they say it's up 26%. So new supply rising, number of sales, demand rising, 70% up in demand, 26% up in number of sales agreed. Well, that's actually taking more off the market. Demand's actually driving the boom. 5% increase in flow of new supply. To be honest, that's nothing. 5% doesn't really make that a significant difference. And if that doesn't continue to happen next month, then there's no rise up to what it was 12 months ago, even up to see where it was pre-pandemic level. Pre-pandemic level, in Fife, for example, there was almost 1,200 properties on the market for sale before the pandemic. And then last year, like 12 months ago, it was 741, and now it's 429. We're running out of stock. Nowhere for people to buy. This is what we call this for sale board crunch, and we did a show about this, Perry and I, just a couple of days ago on our social media pages. So if you want to see that, you can go on our YouTube channel, look up the for sale board crunch, or look up a couple of posts back on here on the actual Facebook page, and you'll see that show we did as well, talking about what to do if you're a buyer out there and you're looking to buy your dream home. We gave you all that advice in the For Sale Board Crunch show we did a couple of days ago. All the nuggets, the golden nuggets of information as a buyer you would need to know to find your next dream home and get ahead of everybody else. That's the key here. So again, let me talk about the new stock supply. Let's jump on to house price inflation and see where we are with this. Okay, so I'm looking at this chart here. Now, what does this tell us? Right, at the beginning, in January 2021, house price rises in the month on month, and this quarterly change was around about 1%. But look, it's the same this month as well, in January. So it's not really changed. It's just gone up with the amount. And I think that's really because activity actually increases during the year because the number of properties coming to the market, number of properties getting bought. actually increases as well. So I've got a sneaking suspicion that'll just continue to rise again and look almost the same as it did the year before in 12 months' time. So UK average house price rises rose by 0.9% in the 3 months to January, according to Zoopla, taking the annual growth rate to 7.8%, down from 8% in December. The price growth gained momentum. See, so you notice a disparity here. House prices in right across the UK are a lot higher than what Zoopla says, according to the Land Registry. So Zoopla's numbers are just slightly out because they only take account of what's listed on their website, and not everything's going to be listed on there. It doesn't take account of private sales, off-market deals that get done as well. So we do off-market deals as well. They don't actually get registered into Zoopla, therefore they don't see that information. And people often pay good prices, even better prices, to have an off-market deal because they can get it before anyone else can see it. But that's all about priority access buyers, and that's why you need to register with us to make sure you could get access to these deals as well. So after gaining momentum during most of 2021, after the busiest years in the market has ever experienced, and the lowest level of quarterly house price growth since August 2020, there's signs that the house price growth is starting to ease, although the path will not be linear, which is a good sign for people looking to buy. It's also a good sign, really, for people looking to sell, because they're still going to get over the home report value more than likely. Price growth has spurred during 2021 during the pandemic. You can see there that chart there, the annual change going, that purple line going right up there and going right up towards the top end there on the top right. So you could see that house price growth going right up. And among buyers and wanting to live elsewhere. So basically, the demand's been driven by the lockdown and people realizing that really they don't need to live in a city anymore. They could move out to village life. They could move out to coastal locations. They could move out to the countryside, and they could move out to smaller towns and actually not have that entrenched feeling of feeling condensed into a city life, and especially for their lifestyle choice for their family and their children. That's really what it comes down to. I mean, if you could walk out of your, two-bedroom apartment in Merchant City in Glasgow, it's probably around about 400,000 plus now. So you can have almost a 5-bedroom detached property in Fife, easily for 400,000. So 5-bedroom detached property in Fife, close to St Andrews, the sea and everything like that, or a 2-bedroom flat in Merchant City. Know which one I would choose for lifestyle. So that's where people are making these choices. Let's have a wee look at the next graph here. So regional house price growth during January 2022. As I said there, that was boosted. The market is highly localized. However, the price growth ranging from 16.6% in Wales to -2.2 in the City of London. Affordability, working practices, and property type are all factors and ranges, and which for the range of the value and the growth of the last 2 years. Liverpool leads the city growth at 10.3%, and with price declines of -0.3% in Aberdeen. There's no surprise there because that's the collapse of the oil industry in Aberdeen. Really, it's driving that. And Aberdeen's actually been low for quite a while. You're actually getting really good prices for Aberdeen just now. So if Aberdeen's due for a bounce back, and you're interested in investing in Aberdeen, it's maybe now a good time to do that. So let's also talk about new supply of homes gathering momentum. So new supply of homes gathering momentum, an imbalance between buyer demand and supplier is not going to unwind in the near term. As you can see by the chart on here, in the late February, the buyer demand for homes was 70% above the 5-year average, and the total stock of homes available for sale was 43% lower. 43% lower. That's almost half the amount it was before a year ago. So, however, the recovery in the levels of new supply is gathering momentum. And in January and February, new listings were up in every part of the country compared to 2021 as more movers and landlords listed their homes for sale. There's landlords out there as well looking at this and thinking, okay, maybe now's the time to take profits and actually moving out the market as a result. That's bringing some more stock on, but it's not enough to keep that, to quell that demand for properties. So you can see there by that chart where it goes. everything from, as you can see, Scotland and there as well. So you can see there in Scotland, in terms of month on month, it's really high there. And also from the previous year as well, and compared to this year. Okay, guys. So UK was a lockdown in early 2021, was in lockdown, and this means that the annual comparison was flattening. But what it also is telling us in the chart is the relationship between listings earlier this year and the long-term trend before the pandemic. In several regions, including Scotland, for example, and the East Midlands, North East, Yorkshire and the Humber, new listings over the last 2 months exceeded the levels seen in 2017 to 2020 over the same period. So it's signalling a turnaround in supply. New listings were broadly in line with the longer term trends in North West and also the West Midlands. In the South West and Wales, for example, there were larger disparities in the listings in January, February compared with before the pandemic. Home values are seen as biggest annual rises with higher levels of demand and a lack of supply pushing up pricing as a result of this. When it comes to the type of properties being listed, there will be welcome news for the markets with high concentrations of families moving, as there has been an annual rise of more than 10% in new listings for larger 3 and 4 bed detached homes. Okay, so that's encouraging news to see there's a flow going into the market. We need more properties to come on because we need to keep these transactions going, and purely for the fact that, because as I said before, people need to move. They have to move because of circumstances. So that's why we need a proper supply in the marketplace. So don't all rush at once, because if you all rush at once, I'm not going to say it could happen, but for example, the credit crunch, and other periods of times, there was a huge surge onto the market all at one time, which caused the crash. I'm not saying, for example, there's going to be a crash. I can't see that happening. There's no indicators to suggest that. In fact, new supply across all most common property types have risen year on year, meaning more listings in the last 2 months than in the same period in 2021. But we know that's only by about 5%, which isn't that wow factor, I would say. So let's look at the new supplies. So new supply of family homes rises year on year, as I said. Picture becomes nonce, however, and we look at supply and the property type compared to pre-pandemic levels as well. So pre-pandemic levels you can see in there with the purple, and then in the black you can see the levels just now in comparison to the year on year. So while new listings for flats is higher, there is still a shortfall in new listings for terraced, semi-detached, detached homes compared to longer term norms, and it signals that the dent in the total stock levels for these homes will really take longer to unwind as a result. So it means that we're not going to have a huge influx into the market at any one point in time soon, I would say. Okay, family homes continue to sell very quickly, with 3-bed houses across the UK, excluding London, reaching a sale agreed in the average of 23 days. Okay, so in Fife, the average has been 29 days for 100,000 to 200,000 pound properties, and it's been 67 days for an average of 400,000 to a 500,000 pound property. So that's in comparison. So the 100 to 200,000 mainly will be in things like Levenmouth and possibly borderline in Cooper, and towards central and west of Fife. You tend to find that the east of Fife, the East Neuk and the St Andrews area and some of the main Cooper area tend to be a lot more than the 100 to 200,000. So no surprise here when we say that this compares to 1-bed flats in London, which takes on average on 53 days to sell from listing to sale agreed. The slower moving flats means that the average price for a flat across the UK rose by 2.6% in the year on the end of January. I believe, and we can see now, that in Fife, flats and apartments are actually becoming the fastest growing in price rises. This time, probably a couple of years ago, a 2-bedroom flat would be round about the 55,000 mark. Now a 2-bedroom flat in central Fife and the central Fife area is round about reaching about 70,000. So it's jumped up dramatically in terms of price in the last couple of years. But it still trails price growth houses with in terms of value, with the average value of the semi-detached home in the UK itself rising by 9.9% over the same period and time frame. Let's have a quick look at that chart. New supply of homes for sale starts to rise as a result, they're saying there. And then finally, let's jump on to the outlook and see where we are with this. Okay, so let's just summarize, as I say here in the outlook. Okay, so with new supply is starting to turn and the speed at the market it moves means that in January, around half of the properties that sold progressed from listing to sale agreed within 3 weeks. In comparison to last year, around a third of the properties progressed this quickly throughout the purchase process. This underlines that it will take time to start to rebuild the total stock of homes in the marketplace. Last year, for example, some 1.5 million homes sales were secured, even as stock levels declined as a result, as willing sellers and buyers were able to agree purchases. The market moves very slowly when there is a choice for buyers. So a rebuilding of the pipelines is positive as movers are more willing to list homes when they can find a property to move to. Now, this is what we spoke about before on our show the other day about the lack of supply in the housing market for Fife. It needs people to put their house in the market for other people to move to, and other people then say, okay, that house is going to the market, I can move to it. So there's a stalemate there somewhere, and it has to break somehow in some sort of way. So you have to take that leap of faith and to go, okay, I'm going to put my house in the market. I'm going to find my next property. You can make that happen for you, okay? We can definitely make that happen for you because we've made it happen for a lot of people. We've got their existing property on, we've kept it on, we've found the right buyer for it. It's quite flexible with the entry date. Will allow them to get their next property, so they're never in a stressful position. They've got to then run about at last minute and think, I've got nowhere to stay. That's never going to happen unless you want it to happen or unless you allow it to happen. It can't happen, okay? And that's our job to make sure it doesn't happen. So changing sentiment in the market as a result of evolving economic conditions. Outlining in more detail below, and the slowdown in the listings, the potential movers and sellers adopt a wait and see approach. Exactly what I said there, wait and see approach. But if everybody waits and sees approach, nobody's going to get anywhere to move to because everybody's waiting and seeing. But in the face of such a high demand, including the first-time buyers who do not need to sell, there will still be an opportunity to secure transactions. There's also an opportunity, as I said before, to secure what we call chain building, which means that we marry you up behind the scenes with other people's properties. So these properties will probably never hit the market at all and nobody will ever know about them. But the transaction happens over a period of 3 to 6 to 12 months, depending on how big the chain is going to be as a result. So that's a chain building solution. Now that used to be done pre-internet by a lot of estate agents years and years ago before the internet, but now we're starting to move back to that again to make sure we can make that happen. And again, that's things that are off market. That's why priority access buyers and registering with us probably the most important thing you could ever do, because you could be included in that chain building process and possibly get access to the property of your dreams, and no one else will know about. So this year, with rising economic headwinds, including the increase of cost of living and rising mortgage rates, will start to put the brakes on the house price growth. Now, rising mortgage rates might be an issue, but what you don't know, and what most people don't know in this information here, there's a lot of people in Fife who actually fixed their mortgage rates for 2 and 5 year periods. So even if mortgage rates start to rise, the existing people might not want to buy a property, but everybody that's still in the market now, it has a mortgage, will still be okay because they have a fixed rate anyway for the next 2 to 5 years. So it shouldn't impact on them at all. And you could potentially port that to your next property as well if you decide to move within a shorter period to your fixed term. But again, you can talk to us about that in future. Okay, the global uncertainty and volatility, clearly, obviously, what's going on just now, resulting from the invasion of the Ukraine, will have economic impacts around the world, including the UK, and how that transpires. Not really sure how to predict that. We'll see what happens in the next month or 2 months and see where we go. Now, Zoopla says they continue to expect 1.2 million home sales this year, down from 1.5 million last year, and that the average house price growth will be between 2 and 4% at the end of the year. Now, that's right across the UK. But as I said before, the average price in the UK just now is sitting around about 244,000. The average price in Fife is 167,000. There's a huge differential there, even when the average salary is almost similar in Fife as it is to Scotland, as it is to the UK. So you can buy more bang for your buck in Fife. That's why it's more affordable to live here as a result. So that makes us a more prosperous proposition for people, and inward investment as well from areas. You can see what's happening in Fife. You could see things like, well, Burger King appears in Cooper. They know something that you possibly don't know, because they understand all the demographics and they get access to all this information well beforehand, and they know exactly where it all fits in this formula that they've got. They know when a town is going to prosper as a result. So that's why they cite themselves there. Costa's in Cooper. McDonald's is in Leven. Starbucks is in Leven. There's other places looking to open in Glenrothes. It's they're looking to open everywhere because they understand the demographics and what is actually happening in the audiences that they need to target as a result. And that's why they target these areas just before they're about to rise on the rise to, and we could see that coming. Finally, let's just have a wee look at the overall graph for the UK itself. So hopefully everybody can see that. Just click back there. Yeah, okay. So we can see that there. So that just shows you right across on a UK basis where all the price rises are according to Zoopla and their statistics. You can see in there at number 18, just across the water from us at Edinburgh, they're sitting at 4.2% increase year on year. But as I said, Fife's been 16%. Huge difference, isn't it? But again, different price point. It's a lot dearer to buy in Edinburgh than it is to buy in Fife. And then again, when you look over into Glasgow, 5.7% increase, and then up to Aberdeen, they've got a minus 0.3% increase. So hopefully that's given you some information, guys, and some insight into this. If you need any more information for this, please feel free to contact me. You can message me direct on this post. The outlook's looking pretty good for the Fife housing market, but it really does all hinge on people coming onto the market and taking that decision to put their house in the market and then letting their estate agent manage the sale, so they're always in a position that they will end up with somewhere else to go as a result, and they won't end up homeless. And that's me, guys. Hopefully you've enjoyed that, and I've enjoyed it as well. And I'll see you tomorrow. The Fife Property Show tomorrow is all about renting. It's all about the buy-to-let market. Let me tell you what the subject is tomorrow, if I can find it. So tomorrow our subject is if I can just jump on Fife Property Show, and we are on the rental reviews. Okay, guys, rental reviews tomorrow. We're going to be talking about that's going to be quite exciting, that subject. So rental review tomorrow, and I'll look forward to seeing you all tomorrow on the Fife Property Show. See you at 9:30. Bye bye for now.